Yo, what's going on, guys? This is not financial advice. I'm not a financial advisor. You get the deal. So today I'm going to be going over stop loss placements, okay? And I'm going to be going over what a stop loss would be for an order block, what the stop loss would be for a fair value gap, safe versus aggressive stop losses for volume imbalances, and then stop losses for inverse fair value gaps, and a couple other PD arrays if I notice them. So first thing, basic, okay, the stop loss for a simple fair value gap is always the swing low that the leg is created on. Okay, so what do I mean by this? Ready? So if I go to like the 15-minute time frame, okay, and let's say we want to long a fair value gap, right? Okay, let's say I want to long this fair value gap. Where would your stop loss be? And many people, okay, they think the stop loss would be under the fair value gap, but if that's the case, then you would have gotten stopped out here, which is not the case, okay? The stop loss for a fair value gap is always below the swing leg that the fair value gap is created off of. Okay, so the stop loss would be here, and this is the swing low before the fair value gap is created. Okay, we get it. This is the last lower low here. So when we get a pump up, okay, this is the last lower low. There's no lower low anywhere else before there's fair value gap. So this would be the stop loss. Okay. If we went to like the 5-minute, okay, same thing. Okay, the fair value gap is just a little smaller. Okay, the stop loss is still the same. It's actually not this low anymore in the 5-minute. It could be this low, and this is where on the 15-minute time frame, okay, you see the stop loss would actually be this low, but in the 5-minute it would be right here. Okay, so I would argue that the safe stop loss is the safest of possible stop losses is this low. But if you're on the smaller time frame, you want a smarter, aggressive stop loss, then this low still should not hit because this is the 5-minute time frame. This is the last swing low before this fair value gap. This should technically still not hit. So this is like an aggressive, smart stop loss. Well, this is like the safest stop loss that you can possibly get without moving it way below the swing low. Okay, so same thing with like with a bearish fair value gap, right? If you were to take this one right here, okay, where would the stop loss be? Ready? This is not a fair value gap I take, but the stop loss would be the last swing high. And in the 5-minute, it looks like, okay, there's a swing high here, there's a swing high here, but the last swing high created before this fair value gap is created is right here. So your stop loss would be right there. Okay, and you can actually see we hit the stop loss, but again, if you place your stop loss at the bid here, right, your stop loss is going to be at the bid, you might not get filled. Okay, but you're definitely going to be filled on this wick. But you can see there's still some point of resistance on, okay, if you took this, there should be a point of resistance at the high where the fair value gap is created, okay? And eventually we do break through it, but you can still see it serves as like a strong point to where, okay, we might have not actually hit the stop loss and we could reverse here because you hit it. Okay, you never went through the stop loss, so in this scenario you might be filled, you might not, but if you weren't filled, that this just goes to show that this should be like, if the market truly wants to go down here, we should really not go above this high. And it looked like that for a minute here, but then we ended up going over it. But again, it wouldn't be this swing high, it would be this right here. And if we go to the 15-minute, right, let me just find where we're just on. So if you go to the 15-minute, okay, what do you notice? There's actually no swing high until up here. Okay, but in the 15-minute, is there any fair value gap here? No, there's no fair value gap here. So because there's no fair value gap, the stop loss would still be the same. It would still be the high of this candle. Okay, because in the 5-minute, there is a fair value gap, and on the 15-minute, there's not really any fair value gap to take anyways. So the stop loss would still be this high instead of pushing it way up here. Okay, so that's for fair value gap, bullish and bearish. All right, so now if we go to back to the 5-minute, okay, the stop loss for an order block would it's very similar. It would basically be the same thing. Okay, so right here, if you were to take this order block, okay, a lot of times these are going to line up. So if you were to short this order block, your stop loss would be above the order block, which this order block is so close to the swing high that a safe stop loss would be right here. The safest stop loss would be right here. But if we were truly bearish here, we should really not go above this high, this order block. So do you see how we actually make a swing high, but the swing high is not created off the order block, it's created off the swing high alone? Okay, the smart aggressive stop loss here would be above this order block. Now, if you could risk another point, I mean, that's fine. You could do this. This is the safe stop loss. But ideally, if price is bearish, we should not go above this order block at all, okay? I don't care that it's close to the swing high. We should not go above it. Same thing with like right here, right? This is actually not a swing high, right? So if you short this order block right here, this is not a swing high right here. Okay, the next swing high off this order block is right here. So if you took this order block, right, your stop loss would not be above here, just be above the order block, because if price is bearish, we should not go above this order block right here. Okay, so you can clearly see we reject this order block. We do not even get close to the top of the order block. Even though this is a swing high, we should not go above this order block right there. Okay, same thing with bullish order block, right? Let me try to find one real quick. So like right here, this is the bullish order block, okay? The stop loss would be under here. Okay, and this would be the safe stop loss, because ideally for bullish, we should not retrace before this order block. Okay, a different kind of smarter, aggressive stop loss would be this. Okay, so if you draw a fib from the open to the close and you mark out the 50% candle, a smart, safe, aggressive stop loss would be if we close, a candle closes below the 0.50 when you draw a fib from open to close of the order block. Okay, and this is a more aggressive but also safe stop loss, because ideally if price is bullish here, we should not close below the main threshold, which is the 0.5. Okay, this is just a safe stop loss, because I have seen occasional times where we do close below the main threshold, but we never actually hit the swing low of the order block. Okay, but a lot of times once we close above that or below the main threshold, we usually just keep expanding, which means you're probably going to get stopped out anyways. Okay, but again, if you want to be smart, or if you want to be a little more aggressive, making sure your stop loss is a close below this. And if you have to walk away from your screen, set your and you have to set bracket order, set it at the bottom of the order block. But if you can watch your screen, then just have a mental stop loss to be like, okay, if we close below mean threshold, I will get out of the position, right? And we never actually close below mean threshold here. Okay, so there's that. Okay, so now if we go to like a breaker block, okay, so something like this right here. Okay, so the breaker block is this whole candle. So see how we break above it, right? Okay, we get a close above it, and then we come down, retest it. For a breaker block, all my stop losses is a close back below. Okay, and this is more of a thing where, okay, you could have a aggressive stop loss and place it right below the order block or breaker block right here, but I don't think that's really smart, because I've seen wicks go under breaker, but we just wick back up and close above it. Okay, I think the smartest stop loss would just be if we close back under the breaker block, because if we are bullish here, we should not close back beneath this breaker block. Okay, and like right here, let me think. Okay, right here, I think it was right here. You kind of see, like, if you took this off this right here, right, you would never gotten stopped. Okay, we almost wicked to the bottom, but some people, they're like, oh, we're so close to the bottom, I'm gonna get stopped out. But you really want to wait till it closed below. So right here, you would have gotten stopped out. But all this was a retrace to discount on a higher time frame, the 15-minute time frame. Okay, it was the inversion fair value gap. So this is why we rebalanced this, in my opinion, rather than bouncing out this. Okay, so again, stop loss for breaker would be close back above or close back below. You could just place it under or over, okay, as soon as you wick, but that's going to be a little too aggressive, in my opinion. You're going to get stopped more likely than not, and the play might still work in your favor. So that is for a breaker block. Okay, so yeah. So now if we go to like a volume imbalance, right? Volume imbalance would be something like, let me see if we can find one. Let me see. So volume imbalance is just a gap between two candles. So something like this. Okay. So this is a volume imbalance, right? So a volume imbalance, you treat it like a fair value gap. Okay. You can see this volume imbalance. The stop would just be under the swing low before the volume imbalance was created. So the stop would be right here. Okay. It's not a wick under, or it's not a close under. It's any sort of wick when we go back under this. Okay. Once you have a volume balance, you treat it like a fair value gap. We should not retrace back below this. We should not retrace back below this volume imbalance, right? Or we should not retrace back the swing low before the volume imbalance was created, right? We should not do that. Okay, so your stop with this would be basically the same thing as fair value gap. Okay, same thing, bearish, ready, right here. Okay, see bearish volume imbalance. It would just be above the swing high, okay? And volume imbalances are interesting because you can have a aggressive stop loss with these. An aggressive stop loss for volume balances would be a close back above the volume balance, okay? If we got a strong green close back above a volume balance, that'd be an invalidation candle for me. I'd probably get out, okay? But sometimes I have seen closes above, and we just hit like an order block, right, like right here, and we reject the order block. Okay, so that can be a little more of an aggressive stop loss, which can be relatively safe because a lot of volume balances we will not close over if price is truly bearish here. Same thing with here. We will not close below this if price is truly bullish. So if you want to look for a more aggressive stop loss, that would be it. But this is the safer stop loss above the swing high before the volume balance is created, okay? Last but not least, we were going to be talking about inversion fair value gaps, okay? So inversion fair value gaps, okay, there's one in the 15-minute, okay? Some people would call this a BPR, but this is not. This is an inversion fair value gap. BPR is a little different. So right here, okay, we have this inversion fair value gap. Let's just, to cut out some arguments, let's just say this wasn't a fair value gap right here. Let's say this is just a fully inversion fair value gap. It's not a BPR or whatever. Okay, let's say this green candle was not a fair value gap. If I were to long this inversion fair value gap, okay, the first thing you want to look for is make sure we have a nice green candle close above it. And then if you were to take this as an inverse, what you'd want to see is you'd want to see every single body respect this, okay? The second the body closes back beneath the inversion fair value gap, that's your stop loss. So this is more of a mental thing, okay? So if the candle closes back below this zone right here, I'm getting out, okay? That's the best smart stop loss in my opinion. It is a little aggressive. If you want to really go very safe, it would be under the swing low. But most times we close back under a inversion fair value gap, we end up going to hit the low anyway. So I think the best stop for an inversion fair value gap is if we close back under, and it saves your risk a little bit as well. So that's a stop loss for an inverse fair value gap. I think that covers most of the common PD rays, okay? So yeah, if you guys have any questions, let me know if you have, or just DM me on Twitter, Discord, Talk on Trading Chat. Okay, I'm going to post a little visual going over some of this stuff on Twitter. So yeah, other than that, I hope you guys enjoyed the video. Peace.